A little over a week into Donald Trump's presidency, and he has hit the ground running, already checking a lot of boxes he promised within the first few days. In fact, on day one, he signed more executive orders than the previous 5 presidents' administrations combined times 3. Biden did 9 on day one. In Trump's first term, he did 1. In Obama's second term, he did 0. In his first term, he did 1. And in Bush's first and second term, he did 0. Trump, second term, day 1, 26 executive orders. He's on a rampage. One day talking to the big billionaire lizard people in Davos at the World Economic Forum. Next, he's in California addressing the devastation from all the catastrophic fires. Then he's in Vegas advocating for no tax on tips. Back to the East Coast talking to families who lost everything from the hurricanes. He's talking to military people. He's answering questions from any and everyone live and open on media outlets. He freed Ross Ulbricht, the creator of the first peer-to-peer Bitcoin marketplace, who was sentenced to double life in prison to be made an item out of by the FBI. There's been an unprecedented amount of transparency, lots to talk about, and likely a lot more to come over the next week. So let's keep it simple, straightforward, and discuss what's moving the crypto markets and what we need to be mindful of as crypto investors over the next few weeks and months. Hello, I'm Crypto Casey, and in this video, we are going to explore the executive orders Trump has signed up to this point that have to do with the crypto industry at large, statements Trump has said about Bitcoin and crypto, and other news moving markets. Let's hit it. Please be sure to check out our sponsors, GoBabyTrade, Uphold, and crypto wallets Tangent and Ledger. If you're not using AI, especially in crypto, you're behind. Profit from the volatility of the crypto markets with GoBabyTrade, an AI-driven robotic crypto trader that trades 24/7 for passive income. Watch a video review here and join the free weekly webinar to learn more, which heads up, I will be on the February 12th one coming up, so be sure to be there. Store your money and manage crypto with Uphold, a Web3 platform that actually holds our money and crypto, doesn't lend it out, is the easiest way to buy, sell, and trade digital assets, is connected to 30 underlying exchanges, so we get the best prices and liquidity on the market. And make sure you own and use multiple cold storage hardware wallets. Tangent is super affordable, extremely easy to set up, only takes like 90 seconds, the size of a credit card, great for beginners. And Ledger Stacks and Flex wallets have extra security layers at the best discount on the market for our community. So scroll down and use the links below to redeem all the special offers they have for us. Sweet. All right, as we pointed out, Trump has been running around and talking a lot. So let's go through some clips together about things he's touched on that will directly affect us, both crypto investors and US citizens at large, starting with his move towards abolishing income tax and replacing that stream of income by reverting back to tariffs on other countries. Check it out.
America is going to be very rich again, and it's going to happen very quickly. It's time for the United States to return to the system that made us richer and more powerful than ever before. Do you know the United States in 1870 to 1913, all tariffs, and that was the richest period in the history of the United States, relatively speaking. In other words, relatively. And they set up the Great Tariff Commission of 1887, and this commission had one function: what to do with all the money that we took in. It was so enormous that they had no idea. It was a blue ribbon committee. It was set up 1887, and what to do with all of the money that we had. And again, Teddy Roosevelt was a beneficiary, because when McKinley was killed, he took over this vast sum of money, and he did all of those national parks and all of the other things. And I'm not knocking him, but he was given a vast amount of money. And that was all made through tariffs. As we had no income tax. The income tax came in 1913. As I said in my speech last week, instead of taxing our citizens to enrich foreign nations, we should be tariffing and taxing foreign nations to enrich our citizens. Does that make sense, right?
Okay, so a brief history of income tax. When it was first created, it only applied to less than 2% of US citizens. Now it applies to 100% of us. The classic, you give the government an inch, they'll take a mile. Basically, it was designed to enslave us and keep us poor. We've got income tax, sales tax, property tax, tangible property tax, estate tax, inheritance tax, capital gains tax. We've got the regressive tax of inflation, where our money is being devalued by reckless money printing of the Federal Reserve, which coincidentally enough, income tax was created around the same time the Federal Reserve was created, the United States' third private central bank, an entity designed and implemented to enslave the country via debt. Because as we've learned numerous times on the channel, the president, via Executive Order 11110 signed by President John F. Kennedy, and Congress via the Constitution, has the power to issue its own government-backed interest-free currency. So why are we issuing debt in the form of treasury bills that the private central bank, the Federal Reserve, buys with money they create literally out of thin air, based on nothing? They type numbers into a database. They lend this money to the US government with interest, which we now pay more on just the interest we owe on our national debt than military spending and everything else. Not to mention the Federal Reserve is not a government entity. It's not federal. It has no reserves, and it answers to no one, not even the president. However, Trump thinks otherwise. Listen to this clip of Trump answering the question posed by a reporter. You said that you would demand that interest rates come down. Do you expect the Fed to listen to you? Check it out.
The interest rates will come down.
You said that you would demand that the interest rates come down.
Well, I would put in a strong statement.
Do you expect the Fed to listen to you?
Yeah.
Yeah, LOL. Okay, so a couple things to consider here. One, before Trump was elected, the Fed was saying we will probably have 1 to 2 rate cuts this year. Then after he was elected, not saying this coincides with Trump being elected, could be a coincidence with market changes. However, just pointing out that the Fed changed their tune to possibly 3 to 4 rate cuts this year. Either way, rate cuts are bullish for markets. They perform better as the cost to borrow money decreases when interest rates decrease. President Trump wants the markets rocking, and likely Federal Reserve Chair Jerome Powell wants to keep his position as the Federal Reserve Chair. Because although presidents technically can't remove them from their position, they are the ones that nominate and can renominate a Fed chair as many times as they want. Obama nominated Powell back in 2012. He was elevated to chair by Trump in his first term, renominated by Biden, and his current 4-year term ends next year. So he does have an incentive to keep Trump happy in order to be renominated. So we shall see. Let me know how low you think interest rates will go this year in the comments below. Cool, next we saw Trump launch a meme coin right before his inauguration. It went absolutely ballistic, like up over 4,000% in a day or two. Pure insanity. It's still unclear what he intends to do with it. The tokenomics are not the best depending on his plans for it. However, what is clear is that he raised a lot of money from the meme coin launch. And with this bit of recent news, and a significant development for the US cryptocurrency sector, Eric Trump, son of US President Donald Trump, has confirmed, according to The Street, that domestic crypto projects, including XRP and HBAR, are set to enjoy a substantial tax benefit. Under the proposed policy, these US-based projects will be exempt from capital gains tax, providing a stark contrast to non-US projects, which will face a 30% tax on their gains. This move is anticipated to spur innovation within the American crypto landscape by making it more financially attractive to invest in or develop US-based cryptocurrencies. Okay, so 2 things to note here besides the obvious I was stated in the article. 1, considering all the money Trump raised in a short period of time from his US-based meme coin, he is extremely incentivized to make US-based cryptos exempt from capital gains. And 2, there is something sinister going on with Ripple we will break down together in another video this week. So make sure to like, subscribe, and hit the bell notification so you know when it drops. So without losing sight of this video, Ripple seems to be the reason why Trump announced the creation of a digital asset stockpile instead of a strategic Bitcoin reserve. Pierre Richard, who was actually just selected by Trump to become the Inspector General for digital assets, sums the Ripple Bitcoin situation up nicely in this tweet. The biggest obstacle for the strategic Bitcoin reserve is not the Fed, Treasury, banks, or Elizabeth Warren. It's Ripple XRP. They are aggressively lobbying against the strategic Bitcoin reserve by throwing around millions at politicians, desperately trying to derail it. They did the same to attack Bitcoin mining under the Biden administration. Obviously, they want to protect their marketing narratives and push for CBDCs built on their platform. Okay, again, we will do a deep dive on that drama in another upcoming video this week, so subscribe and click the bell notification. Without commenting on whether or not we should buy, sell, trade, hold XRP, or what will happen to the price, there are 3 things to keep in mind. 1, Ripple is a centralized digital currency that was actually created by the cartel of private central banks with the intention of becoming the infrastructure and rails for a central bank digital currency. This was the intention all along. Super old news if you've been in crypto for a while, even though it's not super obvious because they hide those intentions well. 2, this week Trump signed an executive order banning the establishment, issuance, circulation, and use of a CBDC within the jurisdiction of the United States. Extremely bullish, the best ever, avoided one of the most heinous crimes against humanity. And to understand why, check out this video about CBDCs, central bank digital currencies, by clicking on the link above. And 3, Pierre Rochard, who has been super vocal about this situation, is now the appointed Inspector General for Digital Assets. Which means we have avoided a CBDC for now. A Bitcoin strategic reserve will be established at some point. Although looking at the prediction markets on Polymarket, people have went from thinking there is a 59% chance of Trump creating a Bitcoin reserve in the first 100 days last week, all the way down to 15% at the time of this video. Personally, Trump's been in office almost 2 weeks. A ton of bullish things were announced and in the works now. My random wild guess is we get a strategic Bitcoin reserve within his first 100 days in office. Because just in, Senator Cynthia Lummis, who is nominated to lead a new subcommittee on digital assets, just revealed a bold proposal to establish a strategic Bitcoin reserve for the US, featuring a yearly purchase of 200,000 Bitcoin over the next 5 years. Yeah, I think we're gonna get it sooner than we think. Let me know what you think in the comments below. Great. Next, another huge win for crypto that was largely overlooked was the reversal of SAB 121. What is SAB 121? SAB is an acronym that stands for Staff Accounting Bulletin, and these are basically summaries written by the SEC, or Securities and Exchange Commission staff, about views they have about a wide range of topics like accounting and financial reporting, revenue recognition practices, disclosures about certain financial instruments, etc. And the number 121 is just an identifier, as there are multiple staff accounting bulletins that are released by the SEC staff. So SAB 121 is an accounting policy that prevents financial institutions from holding crypto or being crypto custodians. Last May of 2024, US Senate voted to get rid of this policy, which is a pretty rare event, demonstrating how ridiculous and egregious the policy is, especially considering the amount of bipartisan agreement there was about repealing the policy. However, there wasn't enough unanimous support to push the bill through without hitting Biden's desk for a final decision, and of course he vetoed it. Just this week, Trump repealed it, which means now banks can custody Bitcoin, hold customers' crypto on their balance sheets. All of this is a huge game changer for digital assets, unlocking tons of money to flow into our industry, allowing for seamless transactions and a lot of investment potential in the space. This, among other things that have happened and are in the works, is yet another nail in the coffin for Operation Choke Point 2.0, which was the government and Fed's mission to cut people off from being able to access crypto markets through the traditional banking system, a form of capital controls to prevent US dollars from exiting their corrupt, rigged, failing system to keep us all enslaved, indebted to them, and poor. The repeal of SAB 121 is extremely bullish. In fact, this was one of the things Michael Saylor, CEO of MicroStrategy, who has been buying Bitcoin like a maniac for years, said this would be a major catalyst for Bitcoin reaching $5 million per Bitcoin and beyond. Brilliant. Another thing that would be a major win for crypto when it comes to big institutional involvement this week, SIBO files for in-kind creations and redemptions on spot Bitcoin ETFs. Just days after Nasdaq's filing for BlackRock's Bitcoin ETF, SIBO joins the race. In-kind transactions could boost efficiency, liquidity, and institutional adoption. Bullish, especially considering the new super pro crypto SEC chair nominee, Paul Atkins, likely taking over soon. Which comes alongside another major announcement from the Trump administration, which is the creation of a cryptocurrency task force to finally establish clear, straightforward regulations for the crypto industry so that people, businesses, projects, and entities building in the space can innovate in a safe regulatory environment. All here in the United States, attracting money, talent, and ultimately will help catapult the US ahead as a global technological superpower. So what kind of regulatory clarity can we expect that will benefit the space? Well, basically, it will provide us with guidelines for what cryptocurrencies are commodities versus securities that need to be registered versus cryptocurrencies that are just generally digital assets that do not need to be registered. With cryptocurrencies that are commodities like Bitcoin and Ethereum, as well as cryptos that will not need to be registered and can exist as they are as general digital assets, won't undergo that much change. So let's explore what cryptocurrencies that are deemed securities will likely have to go through. If a cryptocurrency under new regulations is a security, it will require registration with the SEC, and when it gets registered, consumer protections are built in, like disclosure of who the creators are and the insiders generally involved with the cryptocurrencies, and may even require a board of directors. We won't know yet until the task force gets to work. So just to give us an idea of how a cryptocurrency deemed a security may work, let's just say Trump's coin was deemed a security. Basically, we would be able to see everyone involved in its creation and launch. We would know the difference between crypto wallet owners that were issued or given a certain percentage of tokens before launch versus crypto wallet owners that chose to actively buy and invest in the token after launch. An interesting thing about this scenario is, unless the wallet holders were using some privacy protocol like Tornado Cash, anyone, all of us could track all of their wallet transactions, all their buys, sells, trades, and what they send or receive, which would allow anyone, all of us, to track every other wallet they interact with. And obviously that could be a good or a bad thing depending on the circumstances. For something like a Trump meme coin that was launched by the President of the United States, yes, I think that disclosures about the people involved and who was allocated what percentages at token issuance would be a net positive for us retail investors, especially any of us who are US citizens. However, for other types of cryptocurrencies like Bitcoin, it was definitely best that the identity of the creator or creators were kept anonymous because there was no person, people, or entity that governments or regulators could target, which may have resulted in Bitcoin not gaining as much adoption as we've experienced over the past few years. Another thing that is not a net positive about people or teams having to comply with compliance, rules, disclosures, and regulations that securities have to abide by is that it is very time consuming, expensive, lots of work, therefore stifles innovation, creativity, and slows down adoption and development of new technology. And it will cause money, talent, new technology, and enterprise to flow into other countries with more favorable regulatory environments. Because at the end of the day, crypto is global, decentralized. Anyone, anywhere can launch a crypto project. So if the US makes the development process harder and slower, innovation will go elsewhere where it's easier. On the flip side, if some floozy TikTok influencer like Hawktua and her friends launch a coin and then rug everyone, from a retail investment standpoint, if the cryptocurrency was deemed a security and they had to go through the compliance process before launching, anyone who got scammed would know exactly who the insiders were and who to file a lawsuit against to pursue legal action. So that would deter a lot of bad actors from launching a coin and rugging investors, which is a net positive. Another regulation we could see are lockup periods for any investors involved with a project who were issued tokens at launch, where insiders can't sell coins until like 180 days after the ICO or initial coin offering. And that would be a net positive for retail investors as well. Because as we can see, even with Trump coin, not saying it was Trump specifically, but people that were issued Trump coin at launch have already been selling and starting to take profit, which puts a damper on initial price action, enriches insiders, and hurts retail investors like us. And yet another interesting difference between cryptocurrencies deemed securities versus ones that are not is that crypto securities can only be traded on exchanges that are broker-dealers, like Uphold, for example. And broker-dealers have more consumer protections built in as requirements to operate than just cryptocurrency exchanges like Coinbase. At the time of this video, Coinbase is not a broker-dealer. Therefore, they cannot offer stock or security assets for buying, selling, and trading. They can just offer cryptocurrency trading. While Uphold can offer us access to crypto securities. In addition to cryptocurrencies that aren't securities, they also allow us to trade precious metals, fiat currencies, and allow US investors to earn interest on their US dollars, all while FDIC insured up to $2.5 million. And unlike other broker-dealers, crypto exchanges, and traditional banks, Uphold is a decentralized Web3 platform directly connected to blockchain networks with 30 underlying exchanges, which gives us the best possible prices for cryptocurrencies, way more liquidity when trading, and they also actually hold all of our assets. Everything is there, completely backed. Meanwhile, our money in our bank accounts and cryptos in our crypto exchange accounts are lent out and leveraged. So a key difference to keep in mind with broker-dealers versus crypto exchanges is broker-dealers have limits on how much they can lend out against assets in our accounts, while crypto exchanges can lend out funds we keep on the exchange multiple times, over and over and over again. So there is a lot more risk involved when we choose to leave crypto on crypto exchanges, and even in our traditional bank account. So opt out of the current rigged, corrupt traditional financial system now by entering the next generation of finance. Open an Uphold account that's completely free to use, only takes like 90 seconds to set up, and it provides us with a way safer, better option for storing US dollars than banks and managing crypto than exchanges. And completely own and control your Bitcoin, altcoins, and digital assets for the long term by using multiple hardware wallets. Tangent is super affordable, extremely easy to set up, takes 90 seconds, great for beginners. And Ledger Stacks and Flex wallets have extra security layers, and our community gets the best discounts on the market using the links below. Cool. So the best case scenario when it comes to what regulations the new crypto task force establishes is clear, straightforward parameters that will determine which types of cryptocurrencies are securities versus cryptocurrencies that are not securities. That way we get the best of both worlds. And basically, aside from cryptocurrencies that are deemed commodities like Bitcoin and Ethereum, we will have two classes of cryptocurrencies: registered securities and digital assets in a broader general sense. Either way, regulatory clarity is coming. It could be a year from now before we see the first registered ICO or initial coin offering. And overall, it is very bullish for the cryptocurrency industry at large going forward. Let me know what you think in the comments below. And if you're actively investing in the crypto markets and not using AI, you are getting left behind. Diversify your investment strategies by setting up GoBabyTrade, the AI-enhanced robotic crypto trader, to start making passive income to build long-term wealth. It's literally a set it and forget it investment strategy. Sounds insane. However, I've been using it for over a year now, and tons of y'all have been absolutely loving it since we first explored it several months ago. So definitely take 1 hour out of your life to join us on the free weekly webinar every Wednesday to learn more. I'll be on the February 12th one, so mark your calendars. Also, if you'd like to learn more about how GoBabyTrade works to diversify your crypto investment strategies, check out this video. If you'd like to learn more about Uphold and how it is a way better option than banks and exchanges to store our US dollars and manage crypto, check out this video. And to get an exclusive $1,000 discount off of the 3-year license for GoBabyTrade, click on the link on the screen. Like and subscribe for more. Be safe out there.